Friday morning, good morning. Guy Johnson, Lizzy and Valerie, Tytel around the table this morning. We've got much to discuss. We're an hour away for the opening trade. So what do you need to know? Trump and Xi will speak later today. TikTok topping the agenda. Asian stocks fall after the Bank of Japan says it will start selling its massive ETF holdings. Rates are left on hold, but two vote for a hike. Governor UEDA speaks in 30 minutes. We'll bring you his comments. And European finance ministers are in Copenhagen. And so are we. We're going to be joined by the Spanish and Dutch ministers as pressure grows to halt all purchases of Russian energy, Val.
Well, we start today, equity markets slightly in the red, but it has been a fairly positive week for the equity markets. Yesterday, all four major U.S. stock indices ended at record highs, something we've not seen since 2021. S&P Futures basically unchanged. Eurostoxx futures unchanged as well. Eurodollar on a back foot, but it has been a good week for the currency, up 0.3% on the week. Let's have a look at those U.S. 10-year yields. 4.12 is where we trade. The weakness in fixed income really continuing after that surprisingly strong jobless claims figure yesterday. The countdown to the opening trade starts right now.
Good morning. There's no data on the docket, really. We're going to talk about UK data in just a moment, but no major data that we need to worry about is going to affect US markets. But I have to say, refreshed from his trip to the theme park, Donald Trump is getting into gear once again today, and that's really, I think, going to set the agenda. The 2 p.m. call that we are going to see between Trump and Xi today, I think it's probably the main event, Lizzy.
Yeah, the first direct engagement since June. Does this lead on to an actual face-to-face meeting? That would be the first of the second Trump administration. A watershed moment, really. On the agenda, you've got TikTok, because, of course, they had the Madrid breakthrough already. Trade as well, obviously. Could it ease tariff tensions? You've already seen the pause. Do they extend the pause? Trump hinting at that in the press conference with Keir Starmer when he's in the UK yesterday. I don't know, because, look, you've got Trump putting pressure on Europe to put pressure on China and India to put pressure on Russia. So is she going to be up for, closer ties?
I'm not even sure they're going to get a TikTok deal over the line.
Well, I'm not even sure we're going to know what the readout of this call is, right? They might want to keep, if any, an agreement under wraps, might want to make it really splashy when they do meet possibly next month. But we also have to mention what's happened this week when it comes to China's crackdown on Nvidia and whether that poses some issues with the call today. They have not only said Nvidia has violated anti-monopoly laws, but took aim at one specific chip and told Chinese tech companies they can no longer be buying it or testing it. Yes, there was some good news on Google. They did drop that antitrust case against them, but still, it just seems like the
Chinese may say, actually, well, you won't sell it to us anyway, so to be honest, we're just doing what you did. So maybe that actually evens itself out when it comes to the US story.
From the government, you've got Huawei rolling out all of this lovely tech to rival Nvidia, so it's not just the government itself.
It's going to be, but I'm still not sure they're going to get a TikTok deal over the line that's going to satisfy Congress, because the algorithm issue is still one that I think is going to be hard to deal with, and the Chinese look like they want to retain control. And if they want to retain control, is that going to allow the deal to get done? So that's one story. That's, what is that, 2 p.m., 2:30? I can't remember what the time. 2 p.m. So 2 p.m. is the timing of that call. 9 a.m., 9 p.m. US and Chinese time, just to get everybody on the same page. The BOJ, the story this morning is not the rate story. The story this morning is the ETF story. Yeah, so maybe not entirely shocking, but unexpected. They have decided to start unwinding their portfolio of ETFs at a very small and slow pace. At the pace that they've declared overnight, it would take them 112 years to totally unwind their 37 trillion yen portfolio holdings of ETFs. But again, we got to talk also about the vote split. What happened when they were setting the policy rate? Yes, they held rates at 0.5%, but they had two dissenters voting for a hike, and this is the first time we've actually seen dissenters under UEDA. So we did have a stronger yen, a lower Nikkei on the back of this, higher Japan 2-year yields on the back of maybe some speculation that they could raise policy rates when it comes to October. Their October decision is at the end of October. It comes a few weeks after this LDP leadership race, which is on October 4th.
Yeah, so we'll get the press conference at 7:30 a.m. We need UEDA to be giving those hawkish hints if the yen is going to sustain the gains. But you've got the political uncertainty. Do you get a dove replacing a Sheba? And then the tariff uncertainty. We don't know what the economic impact's going to be.
We need a countdown clock. We're going to get one of those sorted out. 25 minutes until the start of that press conference. European finance ministers are in Copenhagen. Ollie Crook is in Copenhagen. He is there for us. He's got some great guests lined up. The pressure really is beginning to mount on Europe to accelerate its move away from Russian LNG. Ollie Crook's there. What's on the agenda? Ollie, what realistically can be achieved today?
Yeah, Guy, I mean, listen, there's what can be achieved and what will actually come out concretely from these meetings. And then there's the discussions that really need to happen at the highest level of European officials in order to move forward on what have been some pretty bold, shall we call them, recommendations from the Trump administration in terms of how the Europeans should be dealing with the Russians going forward. There's really three proposals I think that these ministers will have to discuss today and to begin to build a consensus on. There's the first, which is this question of secondary tariffs on the Chinese and the Indians. You know, Trump said, listen, we're willing to put in 50 to 100% tariffs, but you have to go first, the Europeans, in order to put pressure on them to stop buying Russian crude oil. We'll be speaking to the Spanish economy minister a little bit later. Very interesting voice in this conversation, really one of the outliers in Europe that's really calling for a much closer relationship with China. So that'll be one of the issues. The other is banning all the sale of Russian gas into the European Union. We should say that last year, despite the fact that we've had this war ongoing for as many years as we have, despite the rhetoric we've heard from the Europeans, about 19% of all the gas that was sold into the European Union last year through pipeline and LNG was still from a Russian provenance. Trump says that that is totally inappropriate. The Europeans are working on a plan to ban it, and we understand that that plan may have moved forward by a full year. By the end of next year, so by 2027, the 1st of January, there could be zero Russian gas going into the European Union. That is one of the proposals. And of course, the last issue is about Russian assets. This has been a lively debate within Europe, what to do with these Russian assets. They've already taken the profits from those assets and dispersing them to Ukraine. The question is, will they now start to talk about how to touch the underlying assets, monetizing those? And that is something that is also building consensus for the first time within Europe, with the Germans recently getting on board. So that's a really sort of big docket, to say nothing of the fact that these sort of other issues of competitiveness and getting growth going within Europe. I should say that I was very happy to speak to the Austrian finance minister yesterday, one of the Frugal Four, who actually said they should be open to more joint debt within Europe. So now we have two of the Frugal Four saying that there basically needs to be an openness to this kind of conversation.
Ollie, great guests lined up. Looking forward to your conversations throughout the next couple of hours. Ollie Crook joining us from Copenhagen. There's a lot to talk about. We've got some great guests coming out of Copenhagen. We've also got some great guests in the show as well. Frederick Newman, HSBC's chief Asia economist, joining us. Perfect timing. Talk about what is happening with the Chinese call today, plus also what is happening with the BOJ. Hugh Gimber, JP Morgan Asset Management, global market strategist, joining us in the second hour. And Victoire Cogviva-Reynal, Mercury 13 co-founder and co-CEO, joining us to talk women's football. Looking forward to that conversation a little bit later on. As I say, though, great guests lined up from Copenhagen. We've got the Spanish economy minister and the Dutch finance minister a little bit later on in the programme. Val.
Let's set you up for the risk events on the horizon. As we mentioned, just in less than 25 minutes' time, we have the Bank of Japan a press conference after they held rates but had two dissenting votes and decided to announce the small unwinding of their ETF portfolio. Also at 8 a.m. UK, the EU finance ministers will be meeting. And then later this afternoon at 2 p.m. UK, Trump and Xi are due to speak by phone. Also later today, we will be hearing from Stephen Myron. He is speaking to the media. He has spoken to the media very often before in his White House role, but this is the first time he'll be speaking to the media under the Fed governor's cap.
Looking forward to hearing more about that.
You got
lonely dot.
Two caps on, or just one cap on? I'm not sure.
One hiding under the other?
One not paid?
Maybe.
Right, here's what else you need to know this morning. President Donald Trump says that US broadcast networks should face license scrutiny if they're to be critical of him. Trump had earlier praised ABC's suspension of Jimmy Kimmel over comments about conservative activist Charlie Kirk. And earlier this week, the president also filed a $15 billion lawsuit against the New York Times. The incidents have spurred worries among Trump critics about freedom of speech in America. Elsewhere, FedEx rises in late trading after reinstating its full-year guidance and projecting revenue growth of up to 6%. But the Memphis-based parcel company is expecting a $1 billion hit to profit from trade volatility this year, highlighting the impact of Donald Trump's import tariffs and the loss of a key exemption for low-value goods. And Nvidia says that it plans to invest £2 billion to support the UK's artificial intelligence industry in partnership with several venture capital firms. The announcement came with CEO Jensen Huang in London as part of President Trump's state visit. Huang says that he plans to invest in autonomous vehicle tech developers Wave and Oxa, as well as fintech Revolut and several AI startups. So it did seem that the deals dominated in Windsor and Chequers. I was there covering the state visit. Not so many blunders, but not also so many breakthroughs either.
No, it went off very nicely. Little trip to the theme park, everything's happy. Nice little dinner. Trip to Chequers,
as you put it.
Sleepover at Windsor Castle. Don't get many of those. As Anne-Marie, I think, put it a little later on, it's like a trip to Hogwarts. and that's kind of how it looked and felt in some respects. Trump had a great time. Looked like he really enjoyed himself.
I've never seen him so happy. He says it's one of the highest honours of his life. Going pretty well, going smoothly. I think it's significant, just by the way, that the tech titans play such a role in US diplomacy, where once upon a time that would have been the likes of Ford. You know, these were companies off to the side at one point. Now they're front and centre of the US diplomatic effort.
Well, perhaps Trump was also smiling because he's made $4.5 billion in a quick time in his investment in Intel.
By being the pitch man.
22% in yesterday's trade off that announcement of their partnership with Nvidia to make some of these chips for the hardware for the data centers in the U.S. It's a big step for Nvidia, who's made mostly all of its chips in Taiwan.
Why is Nvidia doing it is the bit that I can't figure out.
Well, is this because Trump is the pitch man?
Well, that's yes.
But if you thought that, and if you thought it was a bad idea for Nvidia to do this, why did the stock price rise yesterday? That's what I was
Because
asking
it's
myself.
like this halo effect of Nvidia. Anything that Nvidia touches turns to gold.
Or
for now.
Because they think that there's only inevitably going to be more of these investments if you've got the government backing in Intel like this. You had Trump there in the press conference yesterday with Starmer going, Nvidia's taking over the world. You know, you're going to get the hand of Trump behind you.
Well, precisely, but it's the whole halo effect around this. But does it actually... I think there is one positive that could come out of it, which is maybe actually that you do get a breakup of Intel. The logic of breaking up Intel is looking more and more convincing. And you do wonder whether or not this will hasten it, because you can see how kind of Nvidia would work, maybe on the chip design side, less so on the foundry side. So kind of how does that work? But nevertheless, I think the logic of splitting the company up with Nvidia involved becomes more compelling.
Funny you mentioned about a breakup of Intel, because I was listening to UK radio, and they actually phrased it as Nvidia bailing out Intel.
Huh.
Hadn't the government already done that?
That's what I said. Okay.
Well, interesting as well to see the impact on other stocks yesterday. So ASML shares up because Intel, of course, is a customer, and AMD shares down because that's an Nvidia competitor.
Yeah. I don't know. Feels pretty strange to me. What have we got coming up? We're going to go back to Copenhagen. European finance ministers are meeting there today. Stay with the conversations. We've got the Spanish and Dutch finance ministers coming up. Plus, women's football is scoring some pretty big wins right now. We're going to speak to Mercury 13 a little bit later on their investments. They've got a football team in Como. They've got a football team in Brazil. I'm not sure what the relationship between Brazil. Did I say Bristol? How did you mix up Bristol and Brazil? Football and Brazil go hand in hand with in my mind, clearly. Anyway, we'll talk about that a little bit later on. And President Trump and Xi set to speak 2 p.m. UK time. We're going to break down what we can expect from that conversation. You want to join in? It's Friday morning. I'm sure you've got some time on your hands. IB Plus BB TV Go is the function on your Bloomberg. You can see it down there on the right-hand side of the screen. Red Sky in the morning. Just going to say, this is Bloomberg.
43 minutes away from the opening trade. We're looking ahead to 2 p.m. London time. We've got a call set up between President Xi of China and Donald Trump of the US, of course. And in that call, it could determine the fate of TikTok and potentially ease trade tensions as well. So let's get more now with Alan Wan, our senior editor out of Shanghai. Alan, good morning to you. We've got this call coming later today. What are the two sides hoping to achieve?
Well, I mean, we expect both sides to lay the groundwork for a potential meeting between the two leaders in Seoul, Korea in October on the sidelines of the APEC meeting, and even possibly a visit by Trump to China. What's important, what's crucial about this, about a meeting is the fact that, it's not just the fact that, they're heads of state of two of the biggest economies in the world, but they're engaging in what's called head of state diplomacy. That's something that we wrote about today in the Next China newsletter, which it seems like the two leaders are actually themselves resolving a lot of these thorny strategic issues instead of their negotiators doing that. And in terms of why we think that there's a potential meeting during APEC is because of TikTok. That's probably going to be the biggest takeaway during the meeting. We've been hearing that U.S. investors, Andre Horowitz, Oracle, and Silver Lake Partners are going to be taking a stake in the U.S. entity, with ByteDance taking a 20% stake. That may not be a surprise more than the fact that will China license the algos, which is really, what makes TikTok really valuable, or will the U.S. investors own the algos? So that's something that they need to sort of work out. And I'm sure they figured something out already, but that's something a lot of investors are going to be curious about. And they'll also probably talk about trade as well. I just noticed that soybean futures were soaring ahead of tonight's call, mainly because I think the U.S. is hoping that China will start buying some soybeans. They haven't bought any during this market year, compared to billions of dollars worth last year, and they might even talk about buying Boeing planes as well. And for China's part, they're hoping maybe Trump will rescind that 20% fentanyl tariff as well. And then there's the issue of geopolitics, not just Taiwan, as always, but whether or not the U.S. really intends on imposing secondary sanctions on China and India for buying Russian oil. And finally, if there's time, they might even talk about tech issues, namely whether or not U.S. will allow China to buy advanced tech from Nvidia. Nvidia has been caught out in this tug of war between the two countries. So, so a lot to lot to expect today.
There's a lot on the agenda. That is a long shopping list of things that need to be discussed. You wonder whether they'll get past TikTok. Alan, thank you very much indeed. Alan Wan, our senior editor in Shanghai. Let's bring in Frederick Newman, chief Asia economist at HSBC. Good morning.
Good morning.
What do you expect from this call? Is it just TikTok, or do you think they're going to...
No, it's just tech and soy.
Right.
All the other stuff is all wishful thinking, right? These two are going to have a call. The U.S. needs to sell some soybeans to China, and in return we might get some TikTok resolution, and we might maybe get something around chips. What chips will Nvidia can sell to China? Maybe something around that. But all the other issues with the 20% fentanyl, broader geopolitical agreements, I think that's a bit too early to see that happen now.
Could some of those issues get resolved at a face-to-face?
Yes, and that's where exactly this is a lead-up probably to a face-to-face meeting. APEC, as we just heard, is the most likely point. APEC meeting in Korea at the end of October. And that's perhaps where we get a bigger breakthrough. But it doesn't look like that, at least over the past week, we've really gotten to a point where some of the big issues will really be tackled. I think we're still in the mode, kick the can down the road for both sides and see kind of what happens. I think on tariffs, for example, both sides are a bit evenly matched at the moment. They're kind of happy with where we are, 40-50%. And we don't necessarily see a big movement on the big issue like tariffs, for example.
But so you expect the pause in tariffs to just continue beyond the 90 days? It expires in November, is that?
Yeah, November 10th is a big deadline, but as we saw before, these deadlines are movable to some extent. And so we may as well get another 90-day extension after that, because these are very thorny issues. And it's hard to see really a grand bargain to come that quickly with China. As we saw, there's a lot going on. A lot feeds into these tariffs, right? It's about rare earth. It's about other broader issues, fentanyl, for example. I think we will see more likely an extension of deadlines rather than these tariffs suddenly coming off.
And when you think about the fragility of the economic outlook for China, if you just have this rolling uncertainty, does it continue to have the same impact, or does people just get used to the fact that the extension keeps getting extended?
Yeah, it's human nature is you get used to uncertainty over time. But no, the the real issue is that actually China can live with where we are right now.
Right.
You want to avoid it to get worse. If it gets better, okay, that's great. But we're not in a bad state right now. Because remember, China isn't as dependent on the U.S. economy in terms of exports. It's only 2.5% of China's GDP that really ultimately ends up in the U.S. Now, that's a significant share, but it's not, kind of all determinative for China's growth. What matters for China's growth is domestic, right? It's all about consumption, the housing market. The tariffs are more of a sideshow, really, for the big picture.
Well, Fred, it also seems like what matters for China is building a domestically grown chip industry, and they've taken all this action against Nvidia this week. What is your reading of how the Trump administration is going to respond to it? Because it does seem like they're, less bothered by it at the moment.
At the moment, yes, but that might also be because we have the call coming up, and so you don't want to rock the boat too much. Let's see how it plays out after the call. But generally speaking, there's a lot of smoke there, right? Because this is all bargaining position. We don't know whether this move by China, for example, is maybe part of kind of the negotiating tactic, for example. If it is, and that's how the U.S. perceives it, maybe you don't need to get overly upset about it.
Do you see any chance of the U.S. tech companies partnering with Chinese ones like they've done here in the U.K. and announced investment? Do you think that's something that maybe Trump is working on? I mean, that would be very out of consensus, I feel.
It's out of consensus, but not inconceivable. I think this president has proven himself to be very pragmatic. And so, the range of possibilities here is quite large. I think what we can say is that maybe overall the tone of the administration is maybe perhaps a bit more open than we saw in the previous administration when it comes to tech. The fact that Nvidia has some sales in China, can maybe export certain chips. I think we'll move towards a more pragmatic stance generally in the last few months, which was a bit of a surprise to the market, and is why Chinese tech stocks actually probably doing better, because there's a sense of a thaw here around tech issues. It's not resolved, but it's not as antagonistic as it might have been.
I keep reading articles telling me that China feels like it has the upper hand in its relationship with the United States. You talk to a lot of people in Asia. Do you think that's correct?
I would say more evenly matched. I wouldn't say either side has the upper hand. I mean, China does export a lot to the U.S. It does need a lot of access to technology, no doubt about it. But on the other hand, the U.S. also needs a lot of industrial components, rare earths from China. So actually, on the negotiations are pretty evenly matched. And that's why we have this outcome of 40 to 50%. And the most likely outcome is we'll just stay there for a long time, and this thing gets rolled over many times.
We've been talking to our colleague Oliver Crook. He's on the ground in Copenhagen. And, I was listening to Donald Trump over the past couple of days, really calling on Europe to put pressure on China, to put pressure on Russia. Do you kind of discount that that's going to happen via secondary sanctions because, Europe just can't afford it?
It's very tough. China is just so central to Europe's economy, to the world economy in terms of component supplies, that enforcing rigorously secondary sanctions is quite hard. And I think the U.S. has found that, Europe has found it. And so we are in this world where really it's about convincing the Chinese about altering their path rather than necessarily bringing out huge sanctions and moving on China. And that's why I think we are striking a much more pragmatic path down the road.
All right, Fred Newman, you're staying with us, the chief Asia economist, HSBC, staying with us around the table as we wait for the Bank of Japan Governor Kazuo Ueda to begin his press conference in just 3 minutes' time. It's a lot of questions going to be asked about why they chose now to start unwinding their ETF portfolio. Yes, it is a very slow pace, but why now?
Yeah, why now? And is October live? It feels like October is live. 2 dissenters, we're going to talk about that in just a moment. That feels like a big deal. Does that make it more likely? But his tone is going to be important. Press conferences matter. Anyway, we're about to start that press conference. It's in 3 minutes' time. The countdown clock is taking us towards that. We'll talk about it next. This is Bloomberg. Welcome Welcome back. Friday the 19th. The BOJ presser is just getting underway. The equity setup looks like this in Europe. Strong day yesterday. Looks like we're holding those gains in Europe this morning. A positive start is anticipated. Not much of a positive start, but yesterday was strong. The Nikkei is down by 0.6%. Just keep that on your radar screen right now. Lizzy, what's happening in bonds?
Well, we've got a continuation of yesterday's trend. So yields up at the long end. I'm looking at the two-year yield for bunds up 2 basis points, 274 at the moment. Yesterday, we saw that European bond sell-off really led by Germany, given that they're going to be borrowing a fifth more than planned in Q4, and it's going to be heavily weighted to the long end. But we've got to talk about Japanese yields as well, Val, also lower off the back of this BOJ decision.
Yeah, let's head to that Bank of Japan decision. The Bank of Japan Governor Kazuo Ueda has just taken the stand and is reading his statement. This comes after a decision where they decided to hold rates at 0.5%, but did see two dissenters in the decision, those dissenters voting for a hike. The first time we've seen a dissent under Governor Kazuo Ueda, and not entirely shocking, but still unexpected. They've also decided to start running down their ETF holdings, which amount to $37 trillion. 37 trillion yen, excuse me. They'll be running off that at a 330 billion yen annual pace. Minuscule amount, but still interesting that they have chosen this time around to start running off their balance sheet when it comes to their ETF holdings. We have a lot of uncertainty still weighing over the Bank of Japan. There is an LDP leadership race on October 4th. Their next decision is on October 30th, with speculation rising after these two dissents. They might hike rates at that decision. We have Fred Newman still around the table with us, the chief Asia economist at HSBC. Fred, what's your take, at least when it comes to this October meeting, the next meeting for the Bank of Japan? Do you think that they'll likely aim to hike no matter of the political instability at bay?
It is very much live, and in fact, the political transition might actually speed up that hike. Now, in the markets, there's this narrative because of the transition, they might wait, but actually, I think there's a consensus that there needs to be a hike because of high inflation, and any incoming government might want to get the hike out of the way. So actually, there's an argument here for October, but it might be a dovish hike. I think that would be most aligned with the political outlook, and this would be sort of what the BOJ then delivers. Today, they obviously went into equities. They sent a hawkish signal. There was a dissent, so they're teeing themselves up really for October.
Do you think perhaps they will hinge this October hike on just the fact that there's more clarity on tariffs and the economic uncertainty has lessened? Is that something they would hang their hat on as to maybe the reason why they're deciding to hike?
That's right. So by then we'll have a bit more clarity on the data, but we also have the deal in place that's been more or less put to rest. And so BOJ can say there's certainty now. We know what's going to happen with trade. The road is clear for a hike. But they're also going to unveil some of the new forecasts in October, and that gives them then an excuse to say, look, here are new forecasts, and inflation is still a bit too high, and our growth is okay, so let's go.
Why such a slow pace of ETF sales? It's going to take 100 years or something to get. Like...
Yes. Wait. I think we don't want to go very easy because it was a surprise to the market, but you don't want to necessarily knock the market over the head. You can always raise the sell.
Do you expect that to happen?
At some point, yeah, but I don't think there is a big rush here. You want to have a strong equity market. You want to start to signal to the market that the BOJ is starting to remove some support, but do it very gradually. But could we see next year maybe a doubling of the sell-off pace that would reduce us, from 116 years to 50 years, right? So we could see that, but it would never be in such a dramatic fashion that it really just distorts liquidity in the market.
Is the BOJ the real story in Japan, or is the fiscal story?
The fiscal story is the real story, right?
Yeah.
We need to, and that's where the incoming government is important, because we get the leadership election on October 4th, then we need to see the coalition talks, but very likely there's pressure on fiscal easing, and that will put pressure on back-end yields potentially, and that is of global significance because everybody's watching long-term yields because we're all becoming Japan now when it comes to debt.
Yeah, just listening in to these lines out of UEDA, he says that the uncertainty remains high over the global economy. We're talking about the tariff impact. He says that the price trend is to be in line with the goal in the outlook in the second half of the year, the economy recovering moderately, and they'll raise rates if the economic outlook is realised. But I just want to come back to the politics with you, Fred, because, you know, when we look at the runners and riders, how do you think that that's going to affect both the economy and the BOJ? Is there anything that could stop, as Val asked, that October hike?
Look, if you get a coalition partner who's very strong views on not hiking interest rates, and that's the price for the coalition, there could be a suggestion to the BOJ maybe to lay off those hikes. There could also be potentially a much more conservative fiscal outcome, which would also feature into the BOJ's calculation. But I think the bar for both of that is very, very high. And getting a hike out of the way early in your new term is always a preferred choice for any politician. So I wonder how much a politician is going to stand in the way if the BOJ really wants a hike. And we had two dissenters today suggesting that somebody in the BOJ is already thinking about hikes.
Well, yeah, I do wonder how significant that dissent is. It's the first, as Val pointed out, of UEDA's term here to be having such dissent. When you've got pressure from Besant as well, talking about how the BOJ is behind the curve, does it matter that you've got this dissent? It
matters. It matters, I think, because it signals a little bit where the mindset of the Monetary Policy Committee is. Usually in Japan, but also other Asian central banks, you have one or two dissenters before then you get the action in the next meeting. So I think this is a very, very real signal that the discussion around the table has been let's raise rates, but there was just disagreement on the timing, and that's what you see in the dissenters.
Well, just as we've been discussing, Fred, we were waiting for some hawkish signals from Governor UEDA. We've seen the yen pairing some of its gains against the dollar. We're currently at 147 per dollar as we watch UEDA speaking here. But just to recap some of what he's been saying, he says that the BOJ will raise rates if the economic outlook is realised. The uncertainty remains high over the global economy. So we continue to watch that press conference with the BOJ governor. But Fred, really lovely to have you with us around the table this morning, talking both China and Japan. That's Fred Newman, Chief Asia Economist over at HSBC. We thank you. But coming up on the programme, we're going to head back to Copenhagen. We'll be hearing from Spain's Economy Minister, Carlos Cuerpo. That's next. This is Bloomberg.
Well, we're less than 20 minutes away from the cash equity opening trade here in Europe, and it's looking fairly flat when it comes to European equities. We do have U.S. futures, though, in the red, and that comes after a session yesterday in Wall Street where not just one, but all four major U.S. equity benchmarks ended at all-time highs, something we've not seen since 2021, and something that's actually only happened 25 times this century alone. Joining us now to discuss markets is Paul Dobson, executive editor for Asia Markets. I want to start there. Why such a massive rally in small caps yesterday? Was it a reevaluation of what the Fed decision really meant for the U.S. economy?
I mean, yeah, that's the boost, right? The Fed has started cutting interest rates, and the market believes that the Fed's going to keep on cutting interest rates as well. A whole series of lower rates is great news for equity markets. It should pump up the economy. It should therefore inflate the future earnings, not only of the Magnificent Seven, but of all equities. So there's that opportunity for you to spread risk further and wider. And it's not just those four equity gauges that were hitting those record highs either. Look at credit spreads, the tightest since 1998 at the same time. And, of course, the All-Country World Index at a record high, too. So, you know, really those gains spitting out from the U.S. Tech market right the way through the rest of the equity market structure.
But it seems, Paul, that this rally globally has been interrupted somewhat rudely by the Bank of Japan. What is it that's interrupting this specifically? What are investors focused on?
Yeah, well, apart from the fact that, you know, we've got this big long run and maybe it's time for a pause, the BOJ did throw a little bit of a spanner in the works with two quite interesting shifts in the way that it's doing its policy. First of all, it said that it's going to start selling some of the ETFs that it acquired during its QE phase. Not huge enough on its own for it to have a big market impact, but it's more that signaling effect that's important here. The idea that it wants to tighten policy, wants to, you know, do a little bit more QT. And so that gave the equity market something of a setback. You know, the market is at a record high, so the BOJ is, one, turning a profit on it, and two, you know, not causing a huge sell-off from already low levels or anything like that. But two, and I think more importantly here, there were a couple of dissents. The BOJ did hold its policy rate, but a couple of dissents who said, why don't we get on with hikes now? We want to raise interest rates. We don't want to wait any longer. We could do it. You know, Japan has some elections coming up, and that's going to be a little bit of a distraction. And maybe they were thinking, let's get it done beforehand. The economy is strong enough to take this now. And that tips you to the idea that the BOJ is more likely to hike interest rates this year than next year. Again, negative for the equities market.
Paul, what's the main event today in Asia? Is it the BOJ or is it the Trump-Xi call?
I think that from a market's perspective, the Trump-Xi call should largely be a bit of irrelevance in terms of concrete outcomes. I think the signalling there, you know, so long as it ends amicably, is plain for all to see. You know, the relations are in a better position at the moment, and so that's encouraging for equities markets. Of course, Chinese markets in particular, in the stock side and in the AI side, have been on a real tear recently. But actually, and not my area of expertise here, but the thing to watch may be the commodity space, and particularly soybeans. China hasn't bought any US soybeans so far this year or this season. Normally, it would be doing that. The market is rising in anticipation that just maybe there'll be some sort of accord that helps US farmers here.
Beans matter. Bloomberg Executive Editor for Asia Markets, Paul Dobson, thank you very much indeed. European finance ministers, we're going to turn our attention to what is happening in Copenhagen. Now, they're in Copenhagen. It's an informal meeting, though, that is taking place there. Overshadowing the agenda is, of course, all the talk of the latest sanctions proposals against Russia, the bloc's 19th package. Basically, they're aiming to get a coordinated response with the G7 and, of course, part of that, the United States, which is pushing for the bloc to deliver stronger measures, especially against China and India. Tough for Europe to deliver on that, but they are key buyers of Russian energy. Joining us now for the latest on all of this and where we go next in Copenhagen, Bloomberg's Oliver Crook.
That's right, Guy. And really sitting at the heart of these sort of three proposals that have been put forward by the Trump administration on Russian assets, talking about buying LNG within Europe, talking about potentially tariffs on China. Really, Spain sits at the heart of some of these questions, really sort of as an outlier on some things within Europe, and having pushed for some of these already for a long period of time. So I'm very pleased to be joined by Spain's economy minister, Carlos Cuervo. Thank you so much for joining us. I'd like to start, if we may, on this idea of Russian frozen assets. We've been talking about the proceeds, uncontroversial, taking that. Now we're talking about monetizing the underlying assets. This is something that you have pushed for in the past. Where do you see concretely an ability to make progress on that, and when do you think money could flow from that kind of arrangement?
Well, thank you. As you said, since the very beginning from Spain, we've been advocating for increasing as much as possible the financing for Ukraine as one way to leverage their way into the crisis, into the invasion of Russia. And we were advocating to actually look at creative ways to also use those immobilized assets, and within, of course, the boundaries of legal certainty and international regulation. And that's what the Commission is doing. And we expect for a specific proposal in our meeting in October. But Spain will be, of course, supporting that view. We know that the financial needs of Ukraine are still there, and Europe, as we've been doing since the very beginning, needs to be there also to support them.
And one of the other sectors that the Trump administration has wants to say more pressure from the Europeans coming is the purchase of specifically LNG. A lot of the Russian LNG cargoes go to Spain. They park in Spain. About 19% of all the gas that was sold to Europe last year was still Russian. What is your feeling in terms of being able to ban those from the European Union? Are you in support of bringing forward the deadline to basically say that by 2027 there will be no Russian gas in Europe?
Well, we're making progress in terms of divesting our purchases from Russia, reducing them. Actually, from the Spanish perspective, Spanish companies have increased substantially our purchases of LNG from the U.S. So somehow we're getting away from Russia, and it's good that we have a specific calendar. And if we can push ahead more rapidly, then that's good news as well. We'll be pushing from the Spanish perspective as well.
And you also hosted the U.S. administration and the Chinese a little bit earlier this week to have their trade negotiations. You will have had some meetings as well. Spain is a sort of interesting bridge between, if we can say, China and the United States, and really an outlier on many of these sort of European perspectives on how the bloc should position towards China. Trump has said 100% tariffs on China. If the EU goes first, we will follow. Do you take that as a sort of serious proposal, and how do you think that the Europeans should position to try to get try to get China and India off of Russian fossil fuels?
Well, when it comes to trade relations from the EU with respect to other key partners, we are, from the Spanish perspective, within the EU. EU umbrella and within the economic security umbrella as well. What we've been advocating for is that the EU needs to be at the table. We need to be a key and relevant player in all these negotiations, and that means engaging with all relevant parties. We have a huge deficit with respect to China, as does the US as well. So for us to be able to reduce that deficit, we need to engage with Chinese authorities. That's what our Prime Minister is doing. That's what President von der Leyen is doing as well. And this is actually our take on China as well. When it comes to, for example, investment, we have to acknowledge that we have technological gap on some of those sectors with respect to China. We need to attract that investment, but investment that within the security umbrella is able to produce locally, to generate value added, and to close that technological gap as well. So I think this is compatible with reinforcing, of course, our transatlantic relationship and bond, which is the greatest in the world.
And in those conversations you were having with Scott Bessent and Jameson Greer, I assume China was a sort of large protagonist in those conversations. How much pressure are you getting from the United States to kind of adjust your relationship to China? Have they, for example, put pressure on you to cancel contracts with, say, Huawei, which is something that we've seen in other European countries?
Well, actually, those conversations were very constructive. We went through all the main issues that are at stake now in terms of trade, in terms of how our economies are faring as well, both the U.S. and the Spanish economy, which, as you know, is proving to be an outlier in terms of good growth numbers. And we also somehow looked at the EU-US agreement and how we can make the best of it for our companies as well. You know, one element that our companies tell us is that they do not want to disengage from the U.S. market, so we need to help them actually navigate this new framework, and that's what we're doing, and we wanted to engage with the U.S. authorities to be able to do that.
And you highlight the sort of growth rate in Spain. It bears repeating that it's going to grow almost at 3% this year, 2.7%. This is despite the fact that you don't have a budget on the books. You've been rolling over a budget for a couple of years. The budget issue is something that's bringing down governments across Europe. For Spain, do you need a budget? Is there any sort of impediment that there is that you can't actually advance some of your other policy goals not doing that?
Well, we want to actually have a budget agreed with our partners within the parliament. But the thing is that we've been, as you said, running on prolonged budgets for the past couple of years, and that this was not an impediment to push through our reform agenda and all the investments that are within our economic policy agenda as well, including those associated with the next generation EU funds. So we've been able to push through these very good figures in terms of growth and employment growth as well. Just to give you a figure, Spain is around 10% of the Eurozone size, but we've been actually we've been growing that fast as to provide for 40% of Eurozone growth and 30% of Eurozone employment growth as well. So that's how fast we're growing and how fast Spain is leading growth as well in Europe.
Well, that you also highlight how fast Spain is growing, but how slow the rest of Europe is growing. Part of the remedy to that is what we've been hearing from Mario Draghi, getting the agenda put into place. There was a report put out recently that only about 11% of the Draghi report has been put into place over the last year. That said, hearing from him this week, he says that basically what used to be a year ago, 800 billion euros worth of spending, we now need to actually spend 1.2 trillion. Because it's not just that we're not implementing fast enough, it's like actually the scale of the challenge is getting a lot larger. What concretely steps forward can we make over the next few months to try to bring this agenda into reality and out of the abstract?
Well, thanks for the question. I think those words, they come as no surprise for everyone. From the Spanish perspective, what we've been trying to do is we can all agree on Letta's and Draghi's recommendation. I think there's broad consensus that this is the way forward, but there's a sense of frustration because we are not fast enough. There is no sense of urgency on how fast we can go. From the Spanish perspective, we're putting together what we call a competitiveness lab, which is a governance way for coalitions of the willing to go ahead, and then other countries chipping in this further integration in terms of internal market, in terms of capital markets union. We want to be practical, we want to be realistic, and we want to make progress now.
And another sort of final question, there's been a position put forward by the European Commission about sanctions potentially on Israel for what has been going on in Gaza. Do you see that there's going to be a qualified majority to bring that forward? What are the conversations around that surrounding for the finance ministers today?
Well, I expect that there will be a qualified majority because we need to keep on putting pressure on Israel's government to end this genocide in Gaza. I think this is of essence, and our populations and citizens are backing unlocking all these pressure elements, be it on the economic side, on the legal side, on the political side. We need to keep on increasing pressure because that's the only way forward. We need these to stop. We need humanitarian rights to be respected in Gaza, and the Spanish government would be pushing for it.
Carlos Cuerpo, thank you so much for your time, as ever, here on the sidelines of the ECOFIN meeting here in Copenhagen on a litany of different issues, and really sort of pushing forward on this issue of seizing the Russian assets, potentially moving forward on getting out of the LNG, and also being that sort of interesting bridge between China and the United States, hosting that meeting a little earlier this week in Madrid between Scott Bessent and his counterpart in China.
All right, thanks to Bloomberg's Oliver Cook with the Spanish economy minister out in Copenhagen. Thanks for that. He'll have more interviews coming up in next hour.
Looking forward to all of those conversations. We continue to monitor what is happening in Copenhagen. We are now in the countdown towards the market open. Plenty of things happening this morning. European tech could be really quite interesting. We saw that certainly as a big move yesterday. I'm just going to flag gilts as well. The gilt open is about to happen. The deficit data this morning out of the UK. Rachel Reeves has got a hole, and that hole appears to be getting bigger. The shortfall, what is it? The FT's front page, 83.4 billion between April and August. That is a problem. How does the gilt market react to that?
It is a problem, and it could be a problem that gets worse because of the QT decision from the Bank of England yesterday, given that the Treasury has to indemnify the losses here when it comes to QT. So the move from the BOE may have been designed to ease the pressure on Reeves, but all of this could get worse in the run-up to the budget.
Yeah, when we talk about the UK, we have talked about all this tech investment that we heard yesterday, and tech had such a phenomenal day in Europe. The tech sector as a whole yesterday was up 4%, ASML up near 8%, ASM up near 9%.
Is this all rational?
Day.
Is this rational?
That's a great question.
This is all on the back of Intel?
Yeah.
An investment by Nvidia into Intel, a struggling business that already affected.
And the Fed cut.
Yeah,
the Fed cut probably is a factor there, but the Fed cut was already priced, wasn't it?
And that's the broader question for the US stock rally, right? If you've got so few driving all of these gains, half of these gains, can it continue really?
JP Morgan's flagging that. JP Morgan Asset Management flagging that risk. Funny enough, we're going to be speaking to JP Morgan Asset Management in the next hour.
We will indeed. There's much to discuss when it comes to the BOE and that gilt market. But coming up, the opening trade futures pointing higher. This is Bloomberg.
Friday morning, good morning. Still struggling to get my head a little bit around what happened in tech, European tech yesterday. We'll talk about it probably a little bit more in just a moment. But the rally yesterday in Europe was not insignificant. It doesn't continue quite along that pace today. We went out kind of here for for US equities. Not much margin, actually, in terms of the arbitrage, therefore, to price in first thing this morning. But we're kind of holding our ground, Val, which is significant after the moves yesterday.
Yeah, it has been a fairly positive week for European equities. They have outperformed their U.S. peers. Will that continue in Friday's session to end the week? Euro Stoxx 50 futures just hanging on to the green, up less than 0.1%. FTSE 100 futures up 0.1%. Some outperformance in the DAX, though, up nearly 0.25% this morning. Lizzy, is that telling us something about the defense trade today?
Yes, we've got Goldman reinstating their coverage on Rolls-Royce, on Airbus, on Safran, BAE, Dassault and others as well. So that strength expected in the defence sector, likely what is driving the futures picture for the DAX. We're also, as you say, Guy, keeping an eye on tech. Nvidia having invested $5 billion in Intel. That drove Intel shares higher, about 30% at one point yesterday. And as you say, we saw the European read across. ASML shares up, but AMD shares down, given that, of course, is Nvidia's competitor. So we mind the European tech sector as well this morning. Just finally, UK retail. Mind that after the UK retail sales data this morning, up more than expected, once again because of the weather. When was it not? And that's because of the August warm spell. So we watch that, but also we mind the GfK confidence figures. Britain is saving less as the cost of living surges. So watch the UK retailers, Guy.
We will. It's like a rear-view mirror weather forecast. Anyway, here we go. Time for the opening trade. We are expecting a reasonably positive start. Keep an eye on gilts as well, I would argue, first thing this morning. Anyway, let's look at some numbers, get an idea of what is happening. We're not expecting fireworks. The fireworks were yesterday. Today, we're going to be maybe a little bit quieter. We're looking for a catalyst. There could be some a little bit later on, but we'll watch for those as we see what happens, particularly with this Trump-Xi call. We've got the BOJ kind of ongoing as an issue. The Nikkei's been down, but the Stoxx 600 absolutely absolutely flat as a pancake right now. I'm looking for some movement. We're not getting it. Absolutely no movement at all. The FTSE up by 0.2%. The CAC is up by 0.2%. The IBEX is up by 0.2%. Are we going to get some outperformance coming through from the German market today? There could be some acceleration in terms of the fiscal spend coming out of Germany. Keep an eye on that via the Bund market into maybe accelerated spend. It was interesting, we were talking to Morgan Stanley about this yesterday. They were expecting it to be reasonably slow, but maybe the German government has realised this and is going to push forward. Anyway, we're waiting for the DAX to open. Feels a little bit slow this morning. Maybe there's some news flow out of the German market. The SMI also unchanged at the moment. Unopen, I should probably say, at this point in time. We'll see what happens there in just a moment. Val, what does the sector story look like?
Look, it's looking fairly even so far in the first moments of trade. It looks like we have 10 sectors in the green, the remaining 10 in the red, so very evenly split. When it comes to the bottom of the basket, Lizzy, retail is down there. We have Marks and Spencer's and Tesco at the bottom of that basket there, so maybe some of that that retail sales figures coming out today, not necessarily boosting the retail sector in the UK. At the top of the basket at the moment, energy, basic resources. It's interesting to see we're not seeing tech necessarily pull back from yesterday's gain. Yesterday, the tech sector alone was up 4%. Today, it looks like it's now at the bottom of the basket. I have to excuse myself. It's down 0.5%, so giving up slightly some of those gains of yesterday.
Yeah, well, if we drive under the hood for some of those sectors, actually for UK retail, we've got gains for the likes of Fraser's Group up 3%, Sainsbury's up 0.5%, Dunelm, DFS actually not open yet for DFS, but Kingfisher also in the green. And then when you look at ASML, down 0.8% now after those gains of yesterday off that Intel Nvidia investment. And then I had mentioned defence as well. So Goldman, as I say, reinstating coverage on various names and many of them up. The likes of Airbus at 1.6%.
I sort of flagged the gilt open on the back of the deficit data we've had this morning. The 10-year 4.711. It's up by 3.4 this morning. So we are seeing some movement coming through in terms of the gilt market. We are seeing some underperformance versus the rest of Europe. The UK's deficit problem continues. It's getting wider, it's getting bigger, and that is something that's going to be problematic as we count our way down to the budget that is coming up very shortly.
Yeah, the 30-year gilt yield up 4 basis points, 5.54 at the moment, and you could see even worse news from the Office for Budget Responsibility when it comes to Rachel Reeves.
Well, it seems like debt is an issue in the UK. We also know it's an issue across Europe. Let's get back to Copenhagen, where European finance ministers are gathering for an informal meeting with Russia dominating the agenda. Joining us now is Bloomberg's Oliver Crook. Oliver.
Yeah, that's right, Val. So we've been having a lot of conversations here. Though many of the topics are not sort of formally on the agenda today, I think what finance ministers will be thinking about a great proportion are some of the proposals that the Trump administration put forward to the Europeans to say, hey, listen, you want us to put pressure on Russia, here's what you need to do. And we've been discussing a number of those, and specifically the mechanics very critically on how to implement some of those. I'm very pleased to be joined now by the Dutch finance minister, Ilko Heinen. Thank you so much for taking the time today. And I'd like to just start there, if we can, on this question of Russian assets. We know they've been frozen for a very long time. The proceeds have been monetized to help support Ukraine. Now there's a much more open discussion about touching the principal in some way, monetizing those assets. Where do you, as the Netherlands, stand on this, and what do you think the mechanics could be to trying to monetize some of the money in those funds?
Right. So we always said, as the Netherlands, that all the options should be on the table. It should be legally possible, but all the options should be on the table. So we asked the European Commission to put new proposals on the table. They're presenting it quite soon, and we're going to study that. And so
that would be something, do you think, again, as finance minister, something you're familiar with, maybe borrowing against the assets, that sort of thing, using them as sort of backstop on
Yeah, we used that already earlier in the G7 format. We already used those assets as a collateral to give loans to the Ukraine, and now we're going to see if we can use those funds even further. But it should be legally possible. It's a very complicated matter, but once again, all the options should be on the table, because let's not forget, it's Russia attacking Ukraine. Ukraine needs our support, so those frozen assets should be used in the benefit of Ukraine.
Another proposal that we're hearing now from the European Commission at the behest and the pressure of Donald Donald Trump is to move basically the banning of selling of Russian gas into the European Union by a full year forward. So basically it was supposed to be through the end of 27, now looking through the end of 26. I know that that's not necessarily your bag, but there would be an economic impact of doing that on the European economy. I'd like to get your idea of kind of how do you insulate then further from kind of higher gas prices in Europe if indeed the Commission moves forward with that proposal?
Well, Europe as a whole has a main challenge to become energy independent. We should not be dependent on Russia. We have been in the past. We see where it got us, so we should decline our dependence on Russia. And it also means large investments in durable energy to become energy more independent. It's a path on the long term. It's a long-term path, but that's the path we should go.
And you talk about sort of investments. A lot of the investments that the Netherlands, you put a budget forward today. A lot of that is going into defense spending within the Netherlands. It's something we've talked about for many, many months, getting the NATO funding up. But it's also come at the expense of some of the money that is going to Ukraine. Is that really a trade-off that the Netherlands should be making, or how do you think about that?
No, there's no trade-off. Okay. So we should keep supporting Ukraine, but we also have to invest in our own defense. Yeah. I think the Americans made it quite clear Europe should step up to guarantee their own security. So that means that we have to invest more in defense. Mm-hmm. We're now in the middle of that process.
Mm-hmm. And officially on the agenda here is going to be a lot of conversations about boosting productivity, economic growth within the European Union, trying to implement the Draghi report. We just had a sort of analysis of that. Only 11% of the report has been put into place from a year ago. We heard from Mario Draghi speaking this week in, I have to say, fairly stark terms about his appraisal for kind of getting these reforms through and boosting European growth. What for you are the next concrete steps that can be made in terms of executing the Draghi agenda and really reviving the European economy?
Well, Europe, many countries, France in the first place, should have their fiscal house in order. Mm-hmm. And in order to do so, we should make a shift between consumption into investment. And I think that's what the Draghi report also tells us. We should invest and not consume. Mm-hmm. And that's the steps we should take right now.
And how much time does the sort of political drama in France, how much does that occupy of your time? How much does it worry you about this sort of economic fallout and the ability of getting things done in Europe?
Well, I speak to my French colleague. The French government knows that they have to take steps. Actually, they presented a budget with a large amount of budget cuts to get their house more in order. So I'm very supportive in that. But it's now up to the French Parliament to adapt those reforms.
Mm-hmm. And the Dutch government also holds a large stake still in ABN AMRO. You're selling down that stake progressively. I'd like to get a picture from you of kind of what the timeline is for it to be fully divested and the exit for ABN AMRO. Is that something that would say you'd like to complete within the next 2 years, or is that a much sort of longer-term project?
Well, I cannot speculate about timelines in the media, but more in general, I don't think governments should hold banks. This was a temporary measure that we nationalized banks during the financial crisis, and we should, as a government, should sell those stocks again.
And do you take a view as to who you should be selling them to? I ask this only because I am based in Berlin. We had the whole situation with Commerzbank and UniCredit, which caught the government by support, and even the sort of free market FDP at the time said, oh, actually, we're not really up for another bank buying our stake. Is that something that you think about? Is that something that you would sort of try to guide, or are you completely agnostic as to who buys those shares?
I'm agnostic in this position. We're just putting, we're decreasing our stake in the bank, but I'm doing it through an independent agency, and I'm not having any policy stand on that.
And obviously there's an election coming up in the Netherlands. There's been a lot of political instability, not just in the Netherlands, but across Europe. How difficult is that making sort of implementing some of your programs? There's been some complaints about sort of legislation, getting things on tax, going back and forth. Can you get something more comprehensive and actually get your agenda through after October 29th?
Oh, absolutely. So now I presented my budget, which is within the European budgetary rules. I'm decreasing the budget deficit. Our national debt is one of the lowest in Europe. It's half of the European average. So the Netherlands is a very fiscal sound place to be and also to invest in.
Will it be politically sound in the next couple of weeks?
Oh, absolutely.
The next month?
The Netherlands is very stable. And of course, coalitions change. Yeah. We're, as you know, a multi-party system. So that means that you have to have coalition agreements. That takes time. But once you have them, you have a quite stable government.
Well, we'll see about that. I mean, there's some sort of examples of the contrary in France and a couple other places. But Eelco Heijnen, thank you so much. That is the Dutch Minister of Finance here on the sidelines of the ECOFIN meeting here in Copenhagen.
Ollie, great stuff. Thank you very much indeed. Our Europe correspondent, Oliver Crook, joining us from Copenhagen. Quick look at the markets, quick look at the core six. This is the picture we see ourselves with at this point. Mixed, I would say. Luxury's a little bit on the back foot. What is interesting is we're unwinding some of the tech trade from yesterday, which is pretty understandable considering some of the wild moves we seem to have seen in European tech over the last 24 hours. What is interesting as well is that you are maybe seeing some effect coming through from this GS note on defence. Rheinmetall is up by 0.7%. Let's talk about all the other individual movers and dig further into this defence story with Louise Moon.
Indeed, yes. Defence is a big focus this morning on the back of this Goldman note that came out overnight, reinstating a buy for most of these defence companies. So we're looking at the likes of Rheinmetall, Rolls-Royce, Melrose Industry. It did cut Dassault down to a sell, and you can see the stock is reacting on the back of that, down over 2%. But the rest all up in the green. Essentially, the analyst is saying that there's a lot of positivity in the sector. It's gone from a bit of a sluggish sector to one that has really even higher growth prospects than we've already seen. So it's saying valuations are high, but the outlook is even higher. So you can see that's boosting these stocks up, and they've already had a very good run this year and over the past year. So positive news from them this morning. The second one we're looking at is Close Brothers, the UK-listed company, the UK-listed lender. They have delayed their results by about a week to 2 weeks' time, to September 30th, really weighing on their stock this morning, down over 5% now into the red. There wasn't much of an explanation giving, but essentially saying the auditors need more time to go through the processes, and so they've delayed them by 1 week. And then finally, ending on Spire Healthcare. A report overnight that they're reviewing their options, maybe a sale, so considering things there, boosting their stock up over 6%. So they own private healthcare across the UK. So we'll be keeping an eye on that one, and if there's any deals to come from that.
Louise Moon from our equities team, thank you for that roundup. Well, coming up on the show, Starmer's flattery appears to have paid off as President Trump hails a historic second state visit to the UK. We'll discuss that and the latest investment deals from Nvidia next. This is Bloomberg.
Welcome back. You're watching the opening trade. 15 minutes into the session, as you can see, we're just basically holding the gains that we saw yesterday in European equities today. But that's not the real story. That's yesterday's story. Today, the real story is what is happening in the gilt market and what we are seeing in sterling. Last night, I suspect UK officials were probably opening a bottle of champagne, maybe enjoying themselves, feeling good about the fact that the Trump trip went well. Today, the hangover kicks in. Reality is biting once again. The UK deficit gets bigger and bigger and bigger. And Rachel Reeves, the Chancellor of the Exchequer, has a problem, Lizzy.
Yeah, the deficit coming in at £18 billion, well above that £12.5 billion that was expected, forecast by the Office for Budget Responsibility.
Budget responsibility, sorry. That makes me laugh for a moment.
Is it their fault? You've got it's the highest borrowing for the month of August in 5 years. And if you refer to the pound moves, we're down 0.4%, 134 on cable. And then look at the gilt moves as well. So the 10-year yield up now just 2 basis points, I should say. But when we look at the 30-year, up 3 basis points for gilts. I mean, I can't see the way out of this when you look at the politics
When you're in a
of it.
hole, stop digging. But it's tough, and governments around the world are facing the same problem.
Yeah, and do we need a crisis to get a wake-up call here when you've got the left wing of the Labour Party not willing to cut welfare, and then the tax rises hitting growth? It just seems to be a doom loop to many.
Well, it's interesting to note that they did have stronger tax receipts, but it was just totally outweighed by the welfare benefits, by the debt interest. And just to put this in perspective, the deficit in the first 5 months of this fiscal year, second highest on record.
Yep.
Not coming close to 2020, but budging up against it when it comes to the timescale. It's just incredible to think that governments, I mean, maybe the UK is just going to be the shining example of what not to do, but it's very interesting to see that this problem in the UK, it needs a creative solution, and I just don't think the politicians have the creative solution.
Val's got a creative solution. Val, the creative solution is what? Do yield curve control? Because that's what's now being talked about in the United States. The US has the same problem in many respects. The deficit is enormous. Governments keep on spending. How do you resolve that? maybe you turn to kind of managing the bond market as a way of dealing with that, because otherwise the danger is just going to be you end up with this steeper and steeper curve.
Look, Keir Starmer has one solution, but it may take too long, and that is growth, through artificial intelligence. It was some of the good news that came out for the UK government this week. Golden carriages, military splendour, an opulent banquet appearing to pay off as Trump and Starmer concluded a historic state visit. The pair hailing the transatlantic relationship and at least publicly smoothing over their policy differences. We can get more now with Bloomberg's Alex Morgan. So, Alex, I mentioned some of the investment. It seems that there were no blunders, but no major breakthroughs for Starmer. What was the secret?
Well, you're all very safe. You're far enough away I can't be doing any of the shoulder patting that we saw from Starmer and Trump. Really, I think the two men were at pains to emphasise just how close their special relationship was. Two leaders, quote, who genuinely like each other, was Starmer's quote about Trump. And Lizzy, I think you've made the point there that, when is a success averting disaster? Well, I suppose in one sense that's what this was. It was a very, very smooth trip diplomatically. Donald Trump sidestepping awkward questions at that press conference. When he did have a disagreement with Keir Starmer on the issue of recognising a Palestinian state, he went gently into it. A sense then that he was dazzled by that pomp, by that opulence that we saw at Windsor Castle. The King and the Queen, as well as the Prince and Princess of Wales. Really, I mean, extraordinary show of pomp and pageantry.
It's the ultimate fast pass, isn't it? When you go to the theme park, you can you get all the rides.
Well, all in one.
Yeah.
I think another thing that's interesting about this, and Lizzy, I know you were down there as well. Of course, this was taking place at Windsor Castle and then at Chequers. There was a sense in which the sort of protesting public, of which there was a protesting public, was kept away. The events were highly choreographed, they were stage managed, and they went off incredibly well. And Donald Trump seemingly playing well with Keir Starmer, the two men being very pally, as I say, with these shoulder slaps and these taps. I suppose, in one sense, we're saying disasters were averted, but was the needle moved in any meaningful sense? Not necessarily on tariffs, on the Russia-Ukraine war. We got that line that Donald Trump is disappointed in Putin, but no real sort of policy shift there. So maybe, a sense that nothing went wrong, but no huge wins either.
Well, he did dangle a hint that something might be coming when it comes to Russia. And, of course, we've got the UN General Assembly coming in New York next week. Maybe there's more pressure to come from the US.
Yeah, and Trump speaking at that UN General Assembly next week in New York. But Nvidia also announced some plans to invest another £2 billion in UK firms. What do we know about the details of that?
Well, that's the one thing I think that the UK could take away from this, saying, look, we've got the Sharpie now on this tech agreement between the UK and the US, followed by a slew of investments announced by US tech firms, including, of course, Jensen Huang, who was there at this reception in Chequers, then going on at an event in London last night to say that Nvidia will be investing $2 billion in some of the UK startups, including Wave, who were one of Bloomberg UK's startups to watch last year, as well as you got in there Revolut, Poly AI, Synthesia, Latent Labs as well. This, I suppose, this AI investment, this AI partnership is something that Keir Starmer is very keen to talk up. But given the news you've just been talking about and this view of the UK's fiscal position, a lot of these deals, a lot of this AI growth, with people talking longer term. So it's sort of looking good for the future, if you like, talking about the future. But short-term wins for the government on that front, it's questionable.
Yeah, £2 billion into the likes of Wave, as you say. Is that just a bit of a drop in the ocean for Nvidia?
Of course it is. Yes. Tiny.
Chicken feed.
Yeah, not quite chicken feed, but not a huge amount in terms of the scale of things we've been talking about over in the United States. Alex, thanks you very much indeed. Alex Morgan. Talking of things that are happening over in the United States, let's talk about the Intel story yesterday. It moves stocks in tech around the world. The share soaring, Intel share soaring. This after Nvidia agreed to invest $5 billion in the chip maker. Nvidia CEO Jensen Huang says the deal presents an opportunity that could be worth a $50 billion a year for both companies' price tag further down the road.
We thought it was going to be such an incredible investment. This is a big partnership, and we think it's going to be fantastic for Intel. It's going to be fantastic for us. And we're building revolutionary products that's going to address some $50 billion annual market. And so how could we, on the one hand, be excited about the products and how revolutionary they are, on the other hand, not be excited about the opportunities ahead? And so we're delighted to be a shareholder. We're delighted to have invested in Intel. And the return on that investment is going to be fantastic.
How fantastic. Who's going to be the winner Who gains the most here? Is it the US government? Is it Intel? Is it Nvidia? Is it somebody else? What are we going to gain? Who gains and what? Let's try and answer that question with Robert Lee from Bloomberg Intelligence. Robert, talk me through, does this deal make sense, and who does it make sense most for?
OK, well, as you probably most viewers are aware, Intel's been under immense pressure in recent years, strategically and financially. So just to throw a number at you, I think their operating profit was in excess of $20 billion US in 2020, and in fact, they reported a very small loss in 2024. So there's been a massive deterioration in the operating performance of the company, and also that's put a huge amount of pressure on the balance sheet. So what we saw last night with a cash injection from Nvidia will obviously help shore up their balance sheet. If you cast your mind back the last few weeks, we also saw, I think, a $5.7 billion US investment from the US government, and we also saw SoftBank throw in $2 billion. So I think the answer to your question is given by the share prices. Obviously, Intel stock rallied significantly. Interesting, though, Nvidia was only up 3%. So I think it means it's much more meaningful for Intel. And as you said in your previous discussion, is this chicken feed for Nvidia? I think, yeah, $5 billion is not a huge amount of money for them. And I do wonder as well what's been going on behind the scenes. I'm sure, people in the White House, maybe the president himself, has tried to pull a few favors here, because Intel was once, the stalwart, at the very center of US chip making, which is obviously not quite what it used to be. So they need a shoring up of Intel. The biggest question, though, is, what are they going to, strategically, what type of growth markets are they looking to tackle going forward? It's all about the growth.
Well, at least when it comes to growth for Nvidia, we know that the Chinese market is a huge sense of growth potential for them, something they've recently had issues re-entering due to moves by the Chinese government. We've also heard that China's own Huawei is making progress in advanced AI chip making. Is that a real threat to Nvidia's dominance not only in China but globally?
Well, yeah, I think, again, the direction of travel has been clear for, in fact, several years now. China's pushing towards self-sufficiency because, again, from a Chinese perspective, the US is an unreliable partner, and it's all tied up with geopolitics, to state the obvious. So, again, that's been apparent and we've had these various bans on Nvidia chips, going back to the past administration, and obviously the hokey cokey on the H20. So, yeah, Huawei is the national champion in terms of producing AI accelerators. The performance of these chips continues to lag Nvidia. But I think, China will continue and is actively encouraging its AI firms to buy local. So that throws, Nvidia's China opportunity into huge question. And I think in the long run, to be blunt, there won't be a market for them at some point.
Rob, what do you reckon on the hokey cokey on TikTok? We've got the Trump Xi call later today. What do you expect will be the outcome for the framework there?
Right, to cut to the quick, I mean, again, negotiations, if what's being reported, seem to be making some progress. But even disentangling these two businesses is immensely complicated and difficult. Again, it's all tied up with geopolitics and everything else. There's a question mark about who's owning the algorithm. Is it going to be licensed in? Whether new, et cetera, et cetera. So I wouldn't be surprised if, again, the can is kicked down the road, we get another extension, because I think there have been 4 on the ban, and it pushes into next year.
All right, thanks to Robert Lee of Bloomberg Intelligence, keeping us up to speed on the tech industry. Coming up, we'll check in on the markets with Hugh Gimber, global market strategist at JP Morgan Asset Management. That's next. This is Bloomberg.
This is the opening trade. We're 30 minutes into today's session, and it's pretty muted moves across the continent of Europe, except for the CAC 40 in Paris this morning, up 0.6%. And that comes back to a Goldman Sachs change of outlook when it comes to defence. So Airbus shares up this morning, not creating as much positivity for the DAX as perhaps we might have expected, but it's Paris leading the gains. Guy, what's under the hood?
OK, let's talk about what the internals look like. 329 up, 241 down. The market's reasonably reasonably balanced this morning, I would argue, in terms of what we are seeing some internal gyrations, but the move came yesterday in tech. That's where the fireworks were. But volumes, interestingly enough, to speak against that point, is a little bit higher. Somebody's been pointing out to me they've got a big expiry coming up a little bit later on today. Apparently there's a lot of calls. Volume in these expiries getting bigger and bigger and bigger. So that's a factor to think about when it comes to US markets a little bit later on. Let's talk about some of the 52-week lows. There aren't many highs out there this morning. There's a few lows that are worth mentioning. A downgrade for Kuehne Nagel in the logistics space. That stock is down by 34% so far this year as well. I will fold into that narrative as well the news we got out from FedEx yesterday. So just think about that when you look at what is happening with Kuehne Nagel this morning as well. Another stock that is on the back foot as well is LSEG, formerly the London Stock Exchange, now firmly LSEG. London Stock Exchange down by 18.88% year to date and trading a 52-week high. LSEG is the name of that business. They get quite determined to make sure that we say that correctly, so I'm going to keep reinforcing that. LSEG, not London Stock Exchange. Val, what else do we need to know?
Well, let's go to the Bank of Japan, the last central bank to make a decision this week. It says it will begin offloading its massive ETF holdings at a pace of about $4.2 billion by market value per year. The Bank of Japan stuck its policy rate at 0.5 percentage point, but despite 2 dissents favoring a rate hike building up on the board. President Donald Trump says U.S. broadcast networks should face license scrutiny if they're too critical of him. Trump had earlier praised ABC's suspension of Jimmy Kimmel over comments about conservative activist Charlie Kirk. Earlier this week, the president also filed a $15 billion lawsuit against the New York Times. The incidents have spurred worries among Trump critics about freedom of speech in America. And staying with the president, Trump and Chinese leader Xi Jinping are due to speak at 2 p.m. UK time. They'll discuss a framework agreement to shift control of TikTok's U.S. operations from its Chinese parent ByteDance to a consortium of American investors. The leaders' conversation will be their first since June, with the two countries locked in a standoff over trade restrictions, which is threatening key industries like semiconductors and rare earths. Guy?
Let's talk a little bit about what has been happening in these markets. Val takes us nicely to it to talk about what is going on here. The last few days, you've seen central banks. We've had to factor them into our thinking. Bank of England, of course, the Fed, Bank of Japan today, causing some volatility. The real volatility, though, you could argue, really has come in the tech space. Some extraordinary moves over the last few days. Look at what is happening in terms of Intel. Yesterday, massive move. A few days back, it was Oracle. Wow, that was something that was quite epic and appears to have been quite kind of unexpected until it happened, and then apparently everybody expected it, according to the conversations that I've been having, despite the 30-point move. So where does the volatility come from going forward from here? Where are we with these markets and the narrative we find ourselves with at the moment? Hugh Gimber, Global Market Strategist at JP Morgan Asset Management, joining us around the table. Where does the risk come from now? Is it central banks? We've had a lot of them this week. They've moved the dial a little bit, but the tech story has been extraordinary in some of the scale of the moves that we've been seeing.
The risk is inflation, I think, is the simple answer. Because
none of the above?
No, well, none of the above, but it all sort of links into the above, which is to say at the moment you have central banks which are willing, in the case of the Federal Reserve, to be back on the accelerator. Because you're looking at a market where the Fed is saying, we know we have a dual mandate, we think we should prioritise the labour market, and therefore don't worry that inflation is 3% and heading north, because actually the jobs part of our mandate is more important. This all hinges on the assumption that the tariff pass-through is muted and that the Fed can continue to deliver on what is now a very aggressive path of rate cuts, which is being priced. I find that hard to see as we move into the start of next year, where we think the US economy is going to be re-accelerating. Don't lose sight of all the tax refunds that are to come as well as a result of this year's OB3. That adds some more fiscal fuel to the flames in the early part of 2026. And there to still see the Fed saying, don't worry about inflation, perhaps then we're closer to 4% and we can still be on the accelerator, becomes a much more difficult dynamic. So inflation is critical.
A few people were surprised to see Fed, the Powell talking at the Fed of slowing service-side inflation, which speaks against some of the data that we've been seeing recently. But is that good for equities? The scenario you just painted, I'm trying to work out. If the Fed cuts, it's good for equities. If the fiscal accelerates, it's good for equities. Does that hold true? Do equities just win either way?
So short term, it's difficult to see what gets in the way because, as you say, you have more fuel on the flames. Bear in mind, the S&P 500, we're close to 23 times now.
Yep.
You've seen an incredibly strong rebound in the tech stocks in particular. Q2 earnings season, again, not a problem. CapEx continues, nothing to see here. But this is a time where I think you shouldn't lose sight of what is both an equity market and a bond market pricing the best case outcome. The Fed cuts, the economy holds together, earnings keep going is all now, I think, well factored into the price. And it's one where it doesn't take too much of a surprise on inflation to change that narrative quite quickly.
Hugh, does that mean, at least in the bond space, we'll see steeper curves leading into next year? Or is there some other risks on the horizon tempting that the other direction?
We do expect steeper curves. It's something that's played out through 2025 already, but I see nothing to change that dynamic here. Because ultimately, it's been interesting. We've been in a big week for central banks. But are they really in charge of the bond market? No. It's fiscal policy which is now driving bond yields. And investors are right to continually demanding more and more compensation, particularly at the long end of the curve, given what is fueling a lot of this strong economic growth are very, very large deficits. Take the US as an example. We're in an environment here where the economy, yes, has been cooling, but is still, I think, some way away from recession. And you have emergency-type levels of US deficits fueling that expansion. So in that environment, as a bond investor, do you really want to be accepting 4% on a US 10-year Treasury yield? Probably not, unless you're confident the labour market really is going to turn lower.
So do you think the Fed or perhaps the Treasury responding to higher bond yields with bond purchases is something that investors need to have on their radar? Because we heard from Stephen Myron in a Senate confirmation hearing talked about the third mandate of stable, moderate, long-term yields. Surely it has to start ringing alarm bells for bondholders.
This is tricky because if you ask Jerome Powell what the mandate is, he tells you it's dual, it's inflation, and it's the labour market. So this new interpretation of a different sort of yield curve focused mandate, I think, is something that people are finding difficult to wrap their heads around. Just look at the Bank of England this week. They're implicitly doing exactly the same thing. There's no reason for them to be slowing the pace of QT from a monetary policy standpoint. Inflation is high and, like the US, is headed higher. And so we know implicitly the bond market has been quite happy to see a central bank which is on its side helping to smooth some of that volatility at the long end of the curve. The more explicit you try and make that, the more worried you become about a central bank which really is being threatened in terms of its independence, and that therefore becomes bad news for the long end, even if that really is the target.
Yeah, for the BOE, it was the QT part that was the actual exciting part yesterday, not the rate decision itself. I know that they're saying that there's a high bar to make a change like this again, but does it mean in future that every September, when they come up to review this strategy, it becomes a massive risk event again?
I think that's the challenge. And let's be clear, the job of the central bank is to control inflation, in the case of the Bank of England. For the long end of the curve, it's fiscal policy that needs to be in a stable enough position to not see the gilt market overreacting. Because I think if you take a step back, we're in a world where the bond market is the only disciplining force on government spending. Just look at France recently as another example where the government can't decide how to deal with the deficit. The electorate hasn't given them a message as to how to deal with the deficit. A new Prime Minister facing exactly the same problem as the last one, and therefore where do you turn? OATs to tell you what the government can and can't get away with.
But the discipline isn't working, Hugh. This morning we've got these figures from the UK saying, you know, the budget deficit overshooting the OBR forecast yet again. In both the UK case and the France case, what's it going to take to kick these governments into line?
I think what this all leads to is more repeated bouts of bond volatility. And ultimately, there's going to be a kind of shift in the spotlight, I think. As you say, France is the current focus for the bond market. It could well be the UK as we move closer to the November budget. But for bond investors, this is a really interesting environment because it means that you will see these periods where yields widen out quite quickly and you're going to have to be very nimble to handle what that means from a duration perspective. But then again, opportunities to lean back in when the bond market wins, because we think ultimately the bond market will win. Just ask Liz Truss. The UK government saw that very clearly with the move that happened in gilt yields. Again, April, Treasuries, is the same story everywhere.
Tech's not telling me the bond market's going to win right now. It's exploding. Yesterday's moves, you saw them. Tech is not telling me that long-duration assets are going to be a problem. Tech's telling me we are off to the races here. 30% on Oracle, Intel's up 20%. Is it starting to feel irrational? Do the two things, the tech moves and your concerns about what is happening with deficits in the long end of the bond market, they don't fit together, or do they?
But I think the way that you can tie them together is the earnings story.
Okay.
If you're looking at tech and saying we should be liking long-duration assets because yields are coming down and therefore we can see valuations expand in the kind of old-fashioned style, that no longer works. To be buying tech at these levels, you have to be utterly confident on the earning profile of these companies ahead. I also think when you're kind of questioning how do you diversify against some of these tech moves, if you are getting worried about lofty valuations, what has changed really clearly this year is the ability to shift from the mega caps in the US to the broader S&P 500, because tech spending itself is holding up the economy here. You look at the contribution that it's making to GDP. We've got new charts going into the Guide to the Markets in a couple of weeks' time looking at industrial production. It's all tech. So if that falters and tech spend falters, the rest of the economy falters.
Is this tech spending going to deliver? Is it going to deliver a rate of return commensurate with the kind of scale and the requirements that we're talking about? Is there a moment coming when you go, actually, I don't think my ROR on this is going to be high enough, and I certainly can't bolt on a margin to it?
We don't know, I think, is the true answer.
Wow,
I don't know who knows the answer to that question about, really, in 5 years' time, whether we're looking at game-changing productivity from these tech names that can justify the current valuation. Well, let me put that in a slightly different way. What we're seeing in the interim with companies trying to work out how to use this technology is that they need to spend now to understand the implications to their businesses. That's what's different about the AI boom here, that you're seeing spending pick up across all other parts of the economy, not because businesses are utterly confident that this is going to work, but because they need to be spending to find out the answer to that question. And so that's why I think you're hearing from Microsoft and Meta, we're still going, not because anything's changed in the past few months to say we now can answer this question of really, is AI a game changer or not? But because in order to answer that question, spending's booming across the economy.
Hugh, I'm going to have to stop you before you scare Guy any more. Spend and see what happens. The message from Hugh Gimber, global market strategist at JP Morgan Asset Management. Always a pleasure, especially on a Friday, Hugh. Thank you so much. Well, in the spirit of the weekend, next up, we're going to be talking football, women's football, scoring some of its biggest wins. We're going to be joined by Mercury 13's Victoire Reynal to talk about their latest deal next. This is Bloomberg.
Welcome back to the opening trade. We're 46 minutes into today's cash equity session here in Europe, and it's looking like a fairly positive one. We're going to end the week on a strong note. European equities have outperformed their U.S. peers this week. The outperformance, at least today, across Europe happens to be in the CAC 40 France. The index there up 0.6%, led by some upgrades from Goldman Sachs when it comes to Airbus. Also some strength in the French banking sector this morning.
I know what I'm doing this weekend. London Fashion Week.
Are you dressing up for it, Guy? What's your outfit?
I'm not sure you do outfits for fashion.
I don't know why you're mocking it. It's serious business.
I know, of course it is. I'm laughing because I'm the least fashionable person known to humanity, so I'm just kind of, that's the joke, really. The Great River Race is on. I think it's Ketchers. We were trying to debate what kind of boats they are. It seems like there's a multitude of boats going to be in this race. The Berlin Marathon is on. Oktoberfest begins as well. I know it's still September, but we begin early. It's good to get these things underway. And the Women's Rugby World Cup semi-final is taking place. I think it's the Kiwis and the Canadians
playing today.
France versus England. Women's Rugby World Cup final. It's been a slow burn, but actually it's getting really good now.
Should we talk about another shaped ball? The football.
Is there any other shaped ball? As a rugby fan, I'm not entirely sure. We can talk about football if you want.
To the round ones now. Women's football booming. Investors taking notice. Mercury 13, a group co-founded by Victoire Reynal, has acquired a majority stake in Bristol City Women's Football Club after earlier buying FC Como Women in Italy. Now, the group says that the owners need to invest in performance and infrastructure to unlock the commercial viability of women's football. And I'm pleased to say we're now joined by Victoire Reynal, co-founder and co-CEO of Mercury 13, hot off the deal. So congratulations on it. This is serious business when it comes to football, women's football in particular. What's your goal with this deal?
So we launched this company 2 years ago with a very big, ambitious goal of building a portfolio of women's professional football clubs starting across Europe. We did a deal in March of 24 with Como Women, took a majority stake there. And our priority market had always been the UK. We've mapped the entire 3 tiers of football here and found Bristol City women as the perfect target for our group.
Well, the big question now is how women's football is going to make money. What's your plan? How are you going to raise revenues at Bristol City Women?
It's an incredibly important moment for women's football for that same reason. We are very focused on making sure that there's a path to financial sustainability to ensure that these clubs don't depend on whether it's a men's team or a government or a federation or any type of subsidies, and that happens through commercial growth. We want to attract more sponsors, we want to grow audiences, we want to fill stadiums, and that's our plan for Bristol.
When it comes to evaluating other teams you might want to purchase, what is really, I guess, the key asset you go for? Is it a fan base? Is it a key player on the team? Or is it perhaps connections to a men's team and an awareness about a brand? What is really the thing that stands out for you in probably your next acquisition?
It's always about the commercial potential. So is there something that we can work with on the ground that can help this club grow into a much bigger stake, essentially? We also look at the academies and the infrastructure around grassroots. We look at the location. We look at the league as well. That matters quite a lot, right? Here in the WSL, we have a fearless leader, Nikki Doucette, and that gives us a lot of comfort knowing that as the club grows, then the league around it grows as well.
So I've read that most women's teams are either mostly owned or significantly reliant on men's club. Is the dream of women's football in your mind one that is separate from the men's game when it comes to the commercial stake?
Absolutely. It's a different product, it's a different audience, and it needs dedicated resources.
Why did you go for Bristol? Why not go for a bigger team?
Bristol is a huge
I'm a big fan of Bristol, but kind of what is it about Bristol that made you want to go for that team? What is it that ticked all the boxes rather than going for one of the more, to Val's point, one of the teams more associated with the men's game, therefore has that kind of cachet that goes with that? What was it about Bristol that turned your attention down to the West Country?
It truly ticked every single one of our boxes. Firstly, we had a great partner in the Lansdowne family. They were open to understanding and building a deal that has no precedent in the UK. It is the first time that we're giving operational and commercial control to the women's team separated from the men's team. And so we had that. We have incredible infrastructure over there. So Ashton Gate Stadium, 27,000-seater stadium that has just had a 50 million refurbish into it. The Robbins High Performance Center, which is the training grounds of Bristol City, are also incredible, and our players will continue and remain playing there. They have a top-tier academy.
So do you have to put money in? Like, it sounds like all the kit's already there. Do you have to, how much do you have to invest over what kind of a time frame? Or is actually all the infrastructure you need to make this work already in place?
Well, the way that we work at Mercury 13 is that we come as a majority owner, so any expenses that go through the team are our responsibility, but also any revenue that's generated is our responsibility.
But so how much do you think you're going to have to put in?
To get promoted.
Yeah, that's a good point, yeah.
That's a great point. So as of this season, the regulations have changed, and 3 teams will be promoted into the WSL. It has been one only historically. Bristol City had stayed in the WSL for over 10 years, so it's a team that belongs in the top tier of English professional football, and that's very much our goal here. So in the next season, we've already brought in a very strong team. We have the ex-captain of Barcelona, Vicky Losada, on the squad, and we're gunning for that promotion.
But we want to know the numbers, how much you're putting in, and if you can't tell us that, what's the time frame? When does this investment become profitable?
Well, we are a long-term investor. We're here understanding that the sustainability of the game is one that may take time, but we're accelerating every possible part that we can. We've already done it with Como Women in the last year. We've done quite a lot there.
Yeah, so if we look at Como, how much has Mercury 13 increased the revenue there?
By a lot. By a lot. I can't share the numbers, unfortunately, but it's a team that was virtually unknown and now has the most famous women's footballer playing on it.
Can I ask about fashion? Guy's favourite subject. No, only because...
No, actually, I was looking... Funnily enough, I was looking at the Cuomo website, and
did they stand out to you?
Selling gear is obviously a big part of this story.
Milano. Look,
Yeah.
I have to ask, because your background is fashion, what have you taken from fashion business that you're applying to football business?
I think the fashion industry has always understood how to sell products to women. And this is what we're trying to unlock here with football. We believe that women are going to be the next consumer of the sport, and we need to speak in their language in ways that they understand it, that they feel identified. And that's what we did with Como Women. We built a brand that was built for women, by women. And obviously we leaned a lot quite into the luxury and the fashion aspects of it.
All right, thanks for joining us. That was Victoire Reynal, the co-founder and co-CEO at Mercury 13, walking us why she's bullish on women's sports. Well, let's look ahead to what could possibly keep us chained to our desks later this afternoon, and that's this Trump she call taking place at 2 p.m. London time later today. Are we going to get any incremental information about how these two massive economies are going to be
How does Trump spin this, I think, is my key question. Because he's got a number of different competing audiences that he's got to be thinking about, one of which is definitely Congress. Does he walk away from a deal if he doesn't think he's going to get this through Congress in terms of allowing the algorithm, the TikTok algorithm, to be controlled by America? Because that's what the legislation talks about.
Look, I think in my mind, maybe we're not going to hear it very much today, because if they end up agreeing on something instrumental, surely that's something they want to meet face to face and then announce in big fanfare.
This has got to be the precursor. You've got to... You get this out of the way, talk about the other stuff, but I think you need something, progress, to get you to that meeting that's going to take place in October.
So basically TikTok unlocks trade.
Yeah.
Nvidia.
Precisely. Positive momentum takes you into that more difficult conversation, which maybe comes further down the road.
Look, the other thing I want to bring up is that Stephen Myron, the new Fed governor, Trump's pick as the new Fed governor, will be speaking to media later today. It'll be very interesting, as he does speak to the media quite often, but this is the first time he's speaking to media as a Fed governor. Will he tell us any juicy gossip about how that meeting went down?
It's Waller and Bowman I want to hear from.
Yeah, I would agree with that, actually.
Yeah. I know what
Myron's
Myron
quite
thinks.
straightforward.
Yeah.
Isn't it quite straightforward? Yeah, I want 50. I want to see rate cuts. My boss has told me that I need to do that, so that's what I'm going to do. Is he independent? I think that would be the first question I would ask him. Did you have any instructions? Did you have any messaging coming from the White House?
Why didn't you go for a bigger?
No, but maybe, hearing from him on whether he was able to persuade Bowman and Waller and what maybe the roadblocks that were he was pushed back against on.
Isn't the story that they didn't, that they went with the consensus?
Well, yeah, but maybe there was a reason behind that.
You think, in terms of the coordination between them? Or?
Well, we haven't heard from Waller in quite a while, as you mentioned, but we've had, a back and forth when it comes to jobless claims, both issues being with fraud, but still looking like the jobless claims are holding in well, and also a strong retail sales. Perhaps that's what changed his mind on this decision, and maybe Myron give us some color on that.
Well, has he given up on the job and he doesn't feel the need to bow to pressure?
I'm ready for the weekend. I'm just gonna. I'm pretty much done. It's felt like a long week. There's been a lot of kind of information that has come through this week. The Trump visits, that's been like Lizzy's kind of frowning. Definitely roiled out. It's been a big week on that front. Anyway, there's been central banks, there's been massive tech moves. We're going to pull it all together, though, for the weekend. The Bloomberg Weekend newsletter will be with you. Collection of interviews, ideas, stories to explore, some thinky pieces, basically, for your weekend. Have a great weekend, folks. We'll see you Monday. This is Bloomberg.